Now, as we've been reporting here on Focus on Africa, the world's economy is slowing down. So, the demand for commodities is falling as well. This has taken its toll on the mining industry, and today the biggest mining conference in the world got underway in Cape Town. And those attending will be assessing the colossal jobs cuts and falling investments, hoping that the situation will improve on the last few months. 2015 was a terrible year for miners. The price of copper, gold and platinum all fell over the last year. The industry has had to dramatically cut costs. South Africa, the world's largest platinum and manganese producer, could lose as many as 32,000 jobs in the sector. And as commodity prices slid in 2015, so did the currencies. The South African rand down 25% last year against the US dollar. But although demand for some commodities is dwindling, there are other markets opening up. Take phosphate, for instance. It is used in fertilizer and needed by the agricultural sector, but can only be found in the US, the Middle East and Africa. With production dwindling in the US and political insecurity in the Middle East, Africa is where investors are looking to. Well, I'm now joined by Roderick Smith. He's the director of the mining group Cominco that have been investing in the Republic of Congo. Thanks for coming in, Roderick.
Pleasure, Peter.
Let me start by asking you, why are some commodities doing well and others not so well?
Well, when we talk about world economic growth falling and commodities falling off of demand and prices, we're really talking about China. Because China has been using between 40 and 60% of all of the major commodities, copper, lead, zinc, iron, chrome, as they industrialise, and they've done their industrialisation. So like Japan industrialised in the 60s and 70s, used all these things, we're now going back to a more sustained environment. And demand for commodities is actually huge, but there's excess capacity in some minerals that China no longer needs in such big quantities.
Now, you've gone to invest in the Republic of Congo, and
yes.
I understand that what you've discovered there is the largest phosphate deposit anywhere in the world. You've put $50 million so far into
yes.
these mines. How much are you hoping to get back in return?
Well, the development will now cost another $600 million, and the net present value of the project's $1.8 billion. But annual sales will be about $400 million. And we'll be employing 1,000 people in doing that. So it is quite a lucrative business.
Indeed, and you know, but we all know the history about foreign companies going to invest in Africa and taking out all this material and leaving, making a lot of money, but leaving the people there poorer than they were before. So what's your company doing differently to make sure this is not your story?
Well, I can't speak for others, but I know in the Republic of Congo, the government is actually really savvy. We have with them a very comprehensive mining investment agreement which talks about job opportunities and returns to the community. We have committed to put in place training programs to educate people and bring them up to senior jobs over a 5-year period. And so there is a lot in it for them, and there's taxes and royalties paid as well, of course.
If we look across the border to the DR Congo, we hear stories every day about safety in the mines, people dying, people being trapped. Are you doing things differently? Are you trying to change this narrative?
Yes. Well, again, I can't speak for the DRC and local companies there, but international companies, and importantly, their bankers and investors, big funds, subscribe to the Equator Principles, which, as you know, require us to follow World Bank performance standards, which mandate everything. So really, whether the local country in Africa you're dealing in has standards of their own yet, if they haven't yet put in place the bureaucracy and the performance standards, we're bound by these international standards, which control everything from provision of safety equipment, even the minimum size of rooms that they board in. So I think you'll see always an improvement in this area.
Roderick Smith, we'll see that when you start production fully. Thank you very much for coming to talk to us.